Hi, welcome to the Market Alert for Tuesday, the 5th of May 2020. So the headline is that investors ignore mumbling 90-year-old Omaha man buy the bleep dip as Buffett sells. Where's Warren? Well, he is an old man. He's in his late 90s and he's sold everything that he's got and sitting on a massive cash pile. But as ever, we see yesterday that the market moves to the upside. Straight off the 76% retracement, where the market gap down to the 50-bar moving average, and prices have continued to move higher. So let's just expand this out a bit so we can see a bit more. So we need to close back above the 5-bar moving average, and in between all of this, what we've got now is this. Let me just draw this in for you. So from this high to this low, we want to measure how much momentum the market's got to get back to this high. So from this high to this low, these are the two areas of resistance. These are the previous resistance areas that we have marked up. So there's a lot to get through in this area, and it's going to take something special to move the market to the upside, which will bring me on to something else in just a moment. So yesterday's intraday session was fairly steady in the pre-market. We had a bit of a dip to begin with, as you can see there, and then they managed to bring the market back choppy as Europe was closed, or parts of Europe stock bourses were closed. And then on the open, the usual stuff, drop the market, bring the market back, and then they traded sideways for several hours until towards the close when the market started to move higher. So why did it start to move higher? Well, that's quite simple. We're turning on the printing presses again, as it says here. US to borrow a record 4.4 trillion in 2020, more than the previous 5 years combined. Just let that sink in. That's how much they have printed in the last 3 months. It is staggering. But they're going to borrow and print another 3 billion. And you just have to scroll through all of this. Some interesting charts, but this is the important one here. And you can see marketable debt borrowed per fiscal year. And you can see, and again, it comes under the their argument that they need to do this because of the COVID virus and having shut the economy down. But it's bigger than that. It's because they've lost control of the markets. And as I said before, it's the old Einstein thing, isn't it? You know, keep repeating the madness, expecting a different result. And here, they're not going to get a different result. They never cured it in 2008. They just managed to ramp the markets up all the way through the last 12 years. And now, of course, on September the 16th or 18th, when the repo market dried up, and since then it's been all guns blazing to try and keep things together. And eventually it will fall apart. But at the moment, they're managing to keep the market moving to the highs, which we can see here, which is quite staggering when you think about it. So again, just to reiterate, what they're trying to do here is to bring the market back above the 5-bar moving average, and just watch these two areas here. Any news today? Let's have a look. We've got German Constitutional Court ruling. I don't know why that's in here or what it's about. And then we've got ISM manufacturing for the US out at 3 p.m. when the Dow is open. And that's about it for today. Well, let's see how the market moves to the upside. There's not a lot to stop it at the moment, is there? As prices continue to head back towards these two major areas of resistance. Okay, that's it. Thanks for watching. See you in the next one.